Hello everyone and welcome to FSM Super Sundays. My name is Troy and as always we're going to get straight into the charts. Right, so last week's candle very bearish on dollar CAD. We did tell our students that that is mainly based on US oil seeing a recovery. So through the months of March and April we did see a lot of weakness in oil, so oil, it did collapse. And the CAD, the Canadian dollar, is strongly linked to oil, meaning that their currency is greatly weakened as oil did collapse. And we do explain the reasons why and what other currencies are linked to commodities to our students. So guys, please do check that out. There's a free course on our website and also some other paid mentoring and courses as well. But yeah, so from sort of March sort of here, big gap up, and then price continued to higher from around 1.34 up to 146.50 sort of, and now price just sort of slowly did range lower and then now breaking much lower. So dollar CAD looking to push a bit lower. We've got these two levels here on the weekly which do look like price is moving towards quite nicely. Daily time frame, last week we had some shorts lined up. Price didn't pull back to this area here that we had mentioned, but if you were using initiative, you could have got on board with shorts based on a 1 hour time frame using this level of support just here. I'll get into that in a second. In terms of trades for this week, look for shorts. I wouldn't look for any longs, even though we are close to a level of support. I'll look for price to hit the level of support and then show major sort of reversal patterns before I take any longs. What I'll do now is look for price to break below this, pull back, and then take shorts down to 130.35. That's what I'm looking for at the moment. So everything's looking short as long as oil is recovering and there's no sort of crazy news coming out of Canada or of the US to either weaken the Canadian dollar or to strengthen the US dollar quite a lot. Yeah, so I still have a short bias on dollar CAD. If you go to the 4 hour, there's not much going on there. Price just came back into this level of daily sort of support or now resistance area. And if you go to the 1 hour, what we can see is, zooming in a bit more, price broke below, pulled back. You could have got short from here, but because of the time of day, being 4 a.m. UK time, wait for it to, or when you wake up, let's say around 6, you probably could have got short from there maybe, or if you were lucky enough to see it price pull back again around midday and then have this bearish engulfing, you could have then had a short from there, around about a 80 pip stop, I think it was roughly. Yeah, so 80 pip stop loss around there. That's a little bit tight if you want to be safe, back to 100 pips, but 80 pips take profit would have been just before this level. That's where our Fibonacci was if you look in the previous video, and it did get to that level for 3 to 1. Even if you went for 100 pip stop loss, that was still above a 2 to 1, I believe. Yeah, 2.5 to 1 roughly. So that's what you're looking at if you used our bias alongside your own analysis to get on board. And as I said before, guys, I'm not going to take any longs until I see a clear sort of head and shoulders, or sorry, inverted head and shoulders, a clear double bottom at this level of support and a breaking structure to the upside. Now we can go on to sterling yen. Once again, on the weekly time frame, what we're looking at, price did reach this level of resistance, quite a key level on the weekly. So now we're looking for price to pull back. It's now looking like the bulls have stepped in. It's broken structure to the upside, this here and all these levels here. We'll get a pullback and then take longs. I do think it'll pull back in and around this area here. So not quite, I think, yeah, there. So what I'll do is, if you want to be quite aggressive, you can just take shorts from where it is now, maybe go down to the 4 hour daily, wait for it to break this trend line here, then take shorts down to the level I just mentioned. So this level of support turn to resistance once it breaks below and this trend line. So there's 2 touches here. If it breaks below, retest it, this will now become valid. Take shorts down to 134 first of all, 134.44, and then you look for the other levels to the downside as well. Just go back to see this level. Yeah, so that's where the main level we're looking for. If it does break below, you know, let the trade run. But that's our first and immediate target. If you want to be quite conservative, wait for it to break below this level of what's now support, which will turn into resistance, and take shorts down to this level, which will give us roughly a 2.5 to 1 with 100 pip stop loss. Or if you're looking at this trade, something roughly like a anything in here will do, 4.2 to 1 or 4 to 1, let's call it. That will also be a lovely trade as well. So sterling yen, we've got a long-term and medium-term long bias. However, in the short term, we can look for shorts just because this does look overextended and is due a pullback. If we do want to put Fibonacci on, you could put it on from here up to the top, and that lines up with the 50 Fibonacci. Yeah, so that's what we're looking for, a pullback this week on sterling yen. Finally, we'll look at gold, which, as I did say before, was showing signs of weakness and has now shown that it was the bears have come to the market. So yes, last week's candle bearish engulfed the previous 1, 2, 3, 4, 5 candles, almost 6 but not quite. So now you can look for shorts, pull back to this level, this yellow hit level here, and shorts down to, I would say, 1555 would be nice. But just watch the 1641 level on the way. Yeah, that's what we're looking for, guys. Nothing too special on this, just normal shorts. If you go to low time frame, you probably see, you know, trend lines and whatever, to look for breaks of those. And yeah, gold is quite high, you know, it's been up to, you know, 1780 sort of level, which is very, very high for gold. So, and it's been going that way for quite some time. It's due a pullback, as you can see. Look at this. It's just, apart from this here, which is all, you know, around the coronavirus, it's been moving up quite steadily without a huge pullback. Just been sort of short swings to the downside. It's now due a bigger pullback, you know, so down to this level here will be a bigger pullback before it continue higher, or even then look to show, you know, a complete reversal and move much lower. So we go to the 4-hour time frame. You know, that we can see some structures. If we maybe look at, that's one, you can look at that as one, you can look at that as one. That was more clear one because you've got more touches, and then nice break, pull back up here, take shorts. The pullback was actually in line with this level there, so that would have been a nice short to take last week. Once you did see it break out of this trend line here, so yeah, those shorts would have been quite nice. We could have seen something like that. Would have been our first sort of initial thing. You always want to target, you know, the next key level, and then the first point of the trend line would have been the next point there, and then once again this support and that support down there. So with that said, what we can do now moving forward is wait for price to pull back to this level in around here, take shorts down to, first of all, here again. That will be where you would watch, but your target would be 1641 and then 1555 as previously mentioned. So gold, yeah, gold is showing a lot of weakness. Look to take shorts on gold, and try to not jump the gun, you know. Well, by that I mean not try and sort of say, okay, well, the shorts are finished, let's take longs now. Write it down to where it shows complete reversals. Do that for all currency pairs. Don't just think that you can pick bottoms and pick tops. Look to ride the trend. And yeah, we hope you have a wonderful trading week, guys. We're going to wrap up this video here, and we'll see you next week.